For Bitcoin to continue into a macro uptrend, it's going to have to see a break over 24,300 as well as 25,000. These two price points represent on the weekly chart the 50 EMA as well as the 200-day moving average. Two major points that signify a shift in the macro trend from downwards to upwards. We're going to take a look at the macro chart today, discussing those technical indicators and a variety of other indicators as well as short term and so much more. Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day. Today, we're going to be discussing a variety of different technical indicators on the macro chart for Bitcoin. The monthly, the weekly, and the smaller time frame. We'll also take a look at the short time frame, discuss a recent price action, what we expect to see, and what will occur if certain trigger points are broken. We'll also discuss the market data and, of course, the macro environment, along with the traditional markets. If this is kind of stuff you're interested in, go ahead and smash the like button. Hit the comment button, subscribe to the channel for daily videos such as what we listed above. We do technical analysis, price action analysis, and structural analysis primarily on this channel every single day, so do not forget to subscribe. You can also join our Telegram channel, the second link down below. Updates on news events, information, charts, videos, analysis, educational posts. Everything you need is in here. If you're interested in joining our VIP channel, where you'll get specific entries, target stop losses, such as this trade over here, you can go ahead and contact us for more information, find our membership details, or view our trading track record since 2021 Feb. Let's go ahead and jump into today's video, starting off with the market data. So February is down 1.38% currently. We have seen a little bit of turbulence in this month, and of course, we're only about 7 days in. We're just about a week in, and by far, this month has been much less volatile than January. If we look at January compared to February now, we saw 39%, we're only 1.3%. Instead of the start of the month, guys, we're going to see, it was probably going to be quite unlikely that we're going to see such a bullish month this month, particularly after what we saw in January. And again, particularly considering the fact that we're not really in a bull market, it's very unlikely to see Feb being such an explosive month. If anything, we'll see explosive move toward the downside more likely than an explosive move towards the upside if we had to pick and choose. Now, the thing about Feb is, historically, it is actually really bullish. If we take a look at the months historically, we do generally see February being quite green. And I had already kind of covered this, but I'll cover it again. That doesn't mean much this month. The reason being is because we saw an explosive breakout of a falling wedge. We saw a huge rally upwards, and we're not in a bull market. It's quite unlikely that we do see such an explosive month of Bitcoin this month, particularly after what we just saw in January. So I do not have high expectations for February. I think February is going to be a consolidation month, if not a pullback month at best. Okay, moving on, we do see volume is around the same, 66 billion. Liquidations down 28%, 68 million again. We are starting to see volatility drop in the market as we do get a little bit of compression and consolidation at this support, this horizontal support that we have, which makes up our lower area of this macro resistance range. Okay, remember, our resistance range is in fact a range, meaning we have two strong points of resistance, which are these lower parts, and within we have an increased amount of resistance as well. Okay, so it is a range, but these lower points act as individual horizontal supports and resistances depending on what side you're on. For example, when the price action is below, we have a horizontal resistance here and here. When the price action is within, this is our horizontal resistance. This is now horizontal support. The area between is still resistance. So we are technically sitting right at support, the support level, which is made up of that horizontal resistance currently. So we do expect a little bit of support here. We do expect some sort of bounce. If we do see a bounce, we'll talk about today. And of course, we do know that our trigger for a continuation downwards is going to be the loss of that zone, particularly the loss of these lows down over here. Moving back on, volatility is starting to curve out a little bit, 2.43, again, not much change, and liquidations are primarily spread out quite evenly. Again, we have had some spikes in long liquidations and some spikes in short liquidations, but if you look at the last couple hours over here, last 3 hours, we really haven't seen too much. Again, there hasn't been any decisive price action. We're very much consolidating sideways. The DXY, guys, have actually broken upwards from that descending channel. A measured move analysis of the descending channel will take the DXY upwards to around 105.6. Again, the measured move suggests the range, not the target. The target is generally taken to that next resistance. We can go ahead and bring that downwards. At our low over here, we do expect around 105. So a breakout target for DXY here, according to that downward descending channel, is around 105. Of course, this will be bearish for Bitcoin. This will be bearish for stocks. This will bring those asset prices downwards if the DXY continues to rally. But we have seen an explosive rally in the DXY over the last couple of days, a 3% move. It is unlikely we just continue upwards here without a little bit of consolidation, a little bit of a pullback, maybe even potentially back down to 103, this red line, before we continue upwards. So again, that could indicate over the next 48 hours, we could potentially see a little bit of relief in Bitcoin before we get that continuation below 22,600 and get that next leg down. We'll talk about that in a second. Moving on, guys, S&P 500 and Dow Jones. Dow Jones is still very much in that symmetrical triangle. We talked about this pretty much every day this month. We said nothing to be concerned of. We do not care about the price action. It can go up, it can go down. Anything that happens within this symmetrical triangle, we do not care. We only care about the daily candle break above the downward trending resistance or below the upward trending support. That will determine the directional move. The directional move toward the downside, if we take a measured move analysis of the symmetrical triangle, guys, we are expecting a move back towards this downward sloping support, and again towards the upside, we are looking for a move up to 36,600, which of course is that local top over here, which is that absolute high. So a big move coming from the S&P 500 and Dow Jones over here. If that does break upwards, S&P 500 is similar kind of structure. In terms of what we're seeing here, we do expect a move toward the upside. If that upper resistance breaks, again, this will most likely break at the same time that the Dow Jones does actually break upwards. They kind of move at the same time. So break over here will result in a continuation upwards to around 4,300, which is the major bull market trigger or the uptrend trigger, okay? Similar to what Bitcoin is seeing, the uptrend trigger is above 25,000, 24,300. Breaking through this level here will trigger a uptrend on the larger time frame and actually put Bitcoin into a macro uptrend. If we take a look at the 200-day moving average here, we can see that it's sitting around 24,300, particularly 24,500. And if we take a look at the 50 EMA over here, which is a red line, we can see that it's sitting around 24,300. So breaking through that resistance zone here will not only break these horizontal resistances, but put Bitcoin above that weekly moving average, which is 200, and of course a weekly 50 EMA, which will trigger and confirm the trend is now upward on the macro scale, confirming the uptrend. So looking back at the S&P 500, that will occur above this level here. Until then, we can reject and retest this upward trending support. Breaking that support can definitely send the S&P down. That is a concern we are looking at. The bond yields are up quite a fair bit, guys. The bond yields pumped massively. 2-year government bonds are up to over 4.4%. Again, breaking through that 4.4% resistance, looking for a continuation upwards out of that falling wedge. We're looking for 4.6 on higher for a continuation here. At the moment, we are stuck now within a little bit of a resistance range. So a rejection downwards, or of course a push upwards, we'll have to wait and see what to occur. Let's move on to Bitcoin, guys, to the short term, and then jump into the macro analysis. So Bitcoin, of course, has broken downwards from a few structures. We had our rising channel formation over here, which have broke downwards from, as well as a rising wedge formation over here, which we have also broken downwards from. So we had two different structures develop. Again, both were bearish. Both had the similar uptrending resistance, which was the key resistance of the structures, indicating again weakness in the trend. We had weakness in the trend. We had our bearish divergences pop up. We had the volume dropping. We had the volatility dropping. And of course, as we start to see that, we do generally start to see the trend drop. Now, we have mentioned this yesterday. We have structural confirmation of a break. Okay, we've broken out the rising channel. We've broken out the rising wedge. Okay, we've had technical confirmation that we are flipped. We've had the breakout and breakdown from the 50 EMA, okay, and retest of 50 EMA and rejection on the 4 hourly, and we've had the loss of the Gaussian channel on the 4 hourly. So technically and structurally, okay, we have had confirmation that this uptrend is over. Now, the last thing we are waiting for, guys, is a loss of the prior low. This is going to sit around 22,500 to 22,600. Losing that level on the 4 hourly and breaking below will now confirm a rejection from this range here. A confirmed rejection from this area that will trigger the continuation back downwards. Again, our support levels have been outlined, but once more, we are looking for some levels over here. Key levels to be looking for, guys, on the way down will be, of course, this 21,000 200 level to the 20,600 level, and again, loss of that can potentially take us much lower, even as low as 18,400, but very likely we find a lot of support within this area between 19,000 and 19,600. So again, these are our targets on the larger time frame. You can go ahead and see those on the smaller time frame once more over here if you want to pause the video. So moving back to that chart over here, guys, losing this area, breaking down from this horizontal resistance will confirm that continuation downwards. Until then, we do still have a chance to rally back upwards. I really want to make it clear. We do still have a chance to continue upwards. The very important thing you understand over here, guys, is our technicals can confirm a downtrend. Our structures can confirm a downtrend. But until the price action actually initiates and continues in that downtrend, we do still have that potential rise upwards. All this suggests is a downtrend has initiated, which it has. This is technically a downtrend. It has initiated. It is not telling us how low that downtrend is going to go. Very important. The lower we start going here, the stronger these technical confirmations for bearish continuations are going to get, but still they can get very strong until the downtrend actually triggers and initiates. You have to use price action analysis to determine when those entries and when those continuations occur. Now, again, if you've been following the channel, you would have got entries at around 24,300 for shorts. We've had shorts this entire move down. We've actually been warning you guys this entire area that a rejection from this macro zone is very likely. Some clown posted on my video yesterday saying I was late to warn you guys. In fact, I was probably one of the first people saying that we're losing bearish strength as we entered this resistance zone. I've been talking about for 2 weeks now, so you have to pay attention if you're watching these videos. We've been talking about it for a very long time. If we do drop from this level, it will not catch us off guard. We have been well and truly prepared for a continuation downwards if it happens. Now, for the flip side, guys, if we do push upwards here, say we find support here, say we do continue upwards here, what are we looking for a continuation? We are looking for a clean daily candle break above $25,000. Okay, $25,000. We do have to keep in mind that 25,000 to 24,300 is still a pretty key resistance zone. It's a pretty important rejection zone. So a push upwards could occur with a continuation back downwards. That is still a possibility, okay? It is no longer a possibility, or it's a very unlikely possibility if the price loses this local low of that resistance range, okay? But until that occurs, that is still definitely possible, and therefore we have to be aware. Moving to the macro chart, guys, let's take a look at a few indicators. So I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. As we said already, guys, we do need to see that break over 25,000 and 24,300 to get that macro confirmation from a structural level, a horizontal level, a price action level, that the price is an uptrend. And if that happens, we will see, as a consequence, the price break over the 50 EMA on the weekly and, of course, the 200 moving average on the weekly. Both are long-term macro moving averages that suggest the trend will have flipped toward the upside. So technically speaking right now, we are not in the bear market. We are out of the bear market, but we are not in an uptrend. Very important to understand we're kind of in this middle zone. We're not in an uptrend. We're not in a bear market. We've seen a bear market. We've seen what we'll call a reversal, a bear market reversal play out. That reversal has played out perfectly, but it has not yet developed into an uptrend. So let's take a look at a few more technicals on this chart on the monthly and of course on the weekly. We'll start off with the weekly. The Gaussian channel is a very interesting one. As you can see, guys, on the larger time frame, the Gaussian channel has been very, very good at predicting macro trends. Generally, when we see the price enter the Gaussian channel, we, for the most part, see the price move into the midline where we either reject or push directly through the Gaussian channel, creating a new uptrend, okay? We can see that on the macro chart on Bitcoin over here in multiple instances. It's very obvious to see, particularly when we're looking from the top side down. For example, when we're looking at bull market tops to ending that bull market and moving into a downtrend, we generally see a strong trend above the Gaussian channel. When the price enters the Gaussian channel, it signifies weakness. So we did see a little bit of weakness over here, okay? The price entered the Gaussian channel, it pushed through the Gaussian channel toward the downside, okay? We saw the same thing here. We had a strong uptrend above that Gaussian channel. That strong uptrend continued until we broke in where weakness was signified, and that weakness developed into a downtrend, which obviously bottomed out below the Gaussian channel. Looking at again, when we break into the Gaussian channel, we generally continue through the Gaussian channel again. This was a COVID crash, so it never actually would have occurred if we had a little standard chart. Again, that would have continued upwards into the bull market. So we are seeing instances like that. We also can see instances where we actually push into and reject the Gaussian channel. We do need to close and open a candle within the Gaussian channel to confirm that break. So a candle in and an instant rejection doesn't count. We need that candle open and close in the Gaussian channel to confirm that directional move. Currently, the price has not entered Gaussian channel yet. So currently the Gaussian channel at 24,300 to 25,000 is still acting as resistance. Another piece of information indicating that that current resistance range is in fact strong resistance. But as you would know, if strong resistance breaks, what does it become? It becomes very strong support. So although 24,300 to 25,000 is very, very strong resistance, if we are able to break above it, that will trigger that macro uptrend, and we're most likely to continue that macro uptrend until we reach that yearly low, guys, which of course, as you would know, is going to be that $30,000 level, okay? Taking a look at the chart over here, we can see every single time we hit that bottom point over here, we make a new bottom, we push upwards, we break through that yearly low over here, we close a monthly candle above that yearly low, we never ever ever close a monthly candle back below it again. We enter a macro uptrend, and that macro uptrend eventually develops into a bull market once the price closes a monthly candle above that baseline on the Ichimoku cloud, okay? So it all kind of works hand in hand. Moving back to this chart, guys, let's go ahead and take a look at a few other indicators. Okay, guys, another indicator I want to take a look at was the Pi cycle bottom indicator. As you can see, we are seeing the price action retest and potentially reject on the low long SMA. The low long SMA is probably one of the more important moving averages on the Pi cycle on that weekly chart. Okay, when we push above that low long SMA, we generally see a breakout and continuation into the macro uptrend, which ultimately leads to a retest of that high long moving average. You can see over here, and you can see once more over here. Okay, you can see multiple times. So the gap between this area here now is taking us up to around $50,000. So of course, according to a Pi cycle over here, we are able to break above this low long SMA. We are likely to continue into a macro uptrend upwards, breaking through our $30,000 level, which, as you already know, as we talked about before, would trigger a potential bull market. Now, this could take some time to play out. This is not going to happen instantly. It probably won't happen over the next 2 months. We could still see a rejection in Bitcoin before we retest and break through. And even if we retest and break through, the distance between these two levels could still take a long time to play out, okay? Very interesting chart over here, again, suggesting that although Bitcoin has already bottomed, we do not have that macro uptrend confirmation yet. We still are at risk of a rejection or at least consolidation, and we do need to see a breakout a little bit higher to see that continuation upwards. More indicators I want to take a look at is, of course, the market cipher B. The market cipher B showed us a nice strong bullish divergence, which of course has played out. You can see bullish divergence occurred over here. We had our 2 green dots, one lower, one higher, corresponding with higher and lower price action over here, indicating a bullish divergence. We are starting to see some exhaustion here in the market cipher B. Again, we are starting to see volume drop off, again suggesting strong resistance and a potential for a rejection back toward the downside. Moving on, guys, we are going to take a look at our super trends. We have the 3 and the 6 here on our factor length. As you can see, guys, we have printed a potential reversal here on the super trend. But again, for a uptrend to develop and for us to be in a macro uptrend, we do want to see our double green. So we do want to see areas like this, for example. Let's go ahead and put a box in it. We want to see areas like that. We want to see areas like this. And we want to see areas like this. This is going to signify a macro uptrend, all right? What we do see right now is a green and a red. So we are in this transitionary phase right now, still similar to what we have seen before, but we are out of that bear market. The bear market represented by double reds, okay? Bear market bottoms represented by these double red periods. So we are in a transitionary phase. Where does that green come in? It will come in play around 27,000. Which of course will initiate that break over 30,000. So the technicals on the macro chart are definitely suggesting we are at macro resistance here, but not only are we at macro resistance, the macro resistance we're sitting at is incredibly important resistance, as we have discussed many times. Okay, guys, I'm gonna go ahead and end the video there. I hope you enjoyed. If you've got any questions, leave them down below. And of course, we'll see you guys tomorrow. Cheers.